We now have with us Kailash Lalpuria, who's the ED and CEO at Indo Count. Overall, a good set from Indo Count. Welcome on the show, sir. Let me quickly start off with my first question. On the revenue front, could you give us some kind of an overview on both whether the growth, which was 23% on the top line, just for the benefit of viewers, how much of that was volume led, how much of that was pricing led, and how much of that was contributed by GHCL, if you can give us that kind of overview.
So on the revenue side, we had a flat, revenue, including our GHCL numbers, and we have clocked around 74.7 million. As per our guidance, we gave a guidance of 73 to 75 million and a revenue also. And the margin is also maintained between 15 to 17, the guidance which we gave. So it is 16%. And this quarter, we have experienced, improvement in overall demand sentiment as the retailers have reduced their inventory level. And we see an uptick and good momentum going forward. So we see that the growth phase should start. And so the volume and value both had come to play in this fourth quarter. And we expect going forward also, as the guidance which we have given, almost like 15 to 20% increase, like 85 to 90 million in FY24, and a margin improvement to 16 to 18%.
Right, Mr. Lalpuria, improvement in margins to 16 to 18% as well. I'm going to touch upon that margin point. So currently in this quarter, you have given a margin, I'm talking about the quarter, Q4 is 18% margin. So that you're giving a price band of 16 to 18%, so could we expect on the higher end or lower end, or that 18% and upward would be a more sustainable level of margins, given that cotton prices have significantly come off as well?
So we have to see the full year, FY24, and take that into consideration. But there is always a potential, because as we increase our capacity utilization, we will apportion our expenses. And we as a company are working on various strategies on B2C, D2C, that is brand promotion, licensed brand promotion, our domestic foreplay of boutique living and layers, and our e-commerce business shaping quite well. So we see that there is a huge potential for us to grow further our margins, as we move forward. Plus, we have established a world-class, fashion bedding unit, which is dominated always by China. And this is a state-of-art equipment which we have installed, which have commenced production. And we feel that on the filled product side, like comforters, quilts, and pillows, we should be doing well on the fashion, utility, and institutional side, where we have clocked 19% of our overall revenue. And we expect that to, in the next 3 to 4 years, to increase to 30% of our overall revenue.
Okay, right, Mr. Lalpuria. One point and one factor I want to highlight is obviously, the export market, especially US, UK, given that the home textile side was facing a bit of a subduedness in terms of the inflationary pressures coming in over there, as well as the inventory build up with the retailers over there, that was an issue. Now, what is the export market looking like for the company as well and for the industry? Are we seeing a recovery coming in this market, and what would be the expectation for FY24 in terms of orders from here?
So as I mentioned, we see an improvement into reduction of inventory levels at the retail side. So things are turning out to be normal going forward as the sentiments approve. Of course, the headwinds also which we faced in FY23 were on all fronts, whether it is raw material, whether it is logistic, whether it is the demand factor, or whether it is on the price side, on the competitiveness. But you see, all these factors have now normalized more or less, and the cotton prices have come down. The logistic is like well below the average levels. The mismatch into the supply chain also has eased out. So all these factors are going to support going forward the growth. And we as a company, are market ready with our investment in 2 years, which we did during COVID to the extent of 1,055 crores, has made us market ready to grab the opportunities of the FTA being discussed and the demand picking up in all markets. Of course, there are pain points in EU and UK, but we see that there are support from various other countries like Australia, UAE, and we are discussing with GCC, Canada, the FTA as well. So all these factors, I think, will provide India a good advantage to grow its market share, as we see the China plus one strategy also, and other countries also feeling the heat due to the geopolitical situation. So I think we stand on a good wicket. We are market ready. We have completed our capex, and we are expecting that in the next 3 to 4 years we should double our revenues utilizing the capacities. And as we utilize the capacity, as I mentioned, we will be reducing our fixed cost.
And on the fixed cost piece as well, if I can cover one more small piece there. With regard to your debt, is there a plan of debt, of phasing out that debt, of reducing that debt? That's my first part of that question. The other piece is you've highlighted a 20% volume growth, margins at around 18%. So there's a ton of free cash flow coming through. How do you plan to utilize that?
Well, it's a philosophy, to be almost a debt-free company going forward, and whatever free cash flow generation is there, as you can see during this year also, in spite of our investment of 1,054, 55 crores, being a textile company, a capital-intensive industry, everybody expects that we should have drawn the debt and the debt should have gone up. But in spite of this investment, we have reduced our debt. So that's our philosophy. Going forward, whatever cash flow which we will generate, we will invest into technology, into digitization, to see that we expand our customer base as well as improvise our customer services. And at the same time, we will reduce our debt and would like to become, a debt-free company in the next 3 years.
Lalpuria, thank you so much for joining in with us this afternoon, giving us an understanding on what we should be expecting from the company going forward.